Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, May 20th. Taking a quick look at futures, large caps and NASDAQ both down about 0.5% pre-market. Small caps down 0.7, oil down 1.6%, copper's basically flat, and precious metals off about 0.75 to 1%. On the macro front today, we've got jobless claims at 8:30. The Philly Fed comes out at, I believe, 10, along with a leading economic indicator report. We've got a 10-year TIPS inflation-protected bond auction at 1 o'clock. That might be interesting, given all the inflation fears and all that kind of stuff. That might be something to keep an eye on. And Fed member Kaplan is giving a talk tonight at 6 o'clock after hours. The reason I mention it, he's not a voting member of the Fed, but he is probably one of the few more hawkish governors out there. So it may be interesting to see if there's any reaction to that. I'm not one that's going to listen to something like that, but it may be interesting to, after the fact, tomorrow morning or this evening, look for any interpretation, reaction, that kind of thing to some comments that he said. So really choppy day yesterday. We started with a big rug pull down, and then we rallied the rest of the day. So I think, the chop continues. I got a factoid off of Bloomberg that said yesterday 775,000 crypto accounts were liquidated due to margin calls yesterday for a value of around $8 billion. I thought that was significant and interesting. Be careful. I'm mostly tied to leverage, kind of like that Archegos thing. I mean, when you got a really volatile asset class and you get on the wrong side of a move, I mean, you can be wiped out instantly. And that's what happened yesterday with the big drop. And then, all that forced liquidation caused the spike to go even lower. And then, it recovered to a certain extent into the afternoon, but there was a lot of technical damage. In fact, I've got it. Let me jump over. Here's the Grayscale Bitcoin Trust. Dropped down to 28, tagged it, and then recovered most of the losses, but was still down 5%. And most importantly, dropped below a support level and dropped below the 200 EMA. So from a technical standpoint, there was damage done yesterday. Now the key for the bulls, job one is simply to recover the 200 EMA and then go from there. If it can't do it, if it gets stalled here and starts to roll over, that will obviously be bearish. And I think just from a chart dynamic standpoint, the bears are definitely in control. The RSI has moved into the bearish regime here, below 50 for the first time since way back here. And momentum is coming out with PPO on the wrong side of the zero line. So, and price is below all the moving averages, which have turned down. So all that taken together, the bears are in control. Of course, everything can always be saved if buyers come in and, job one, recover the 200 and then just start grinding higher. I have no idea if they're going to be able to do that or not, but it's certainly something worth watching, even if just to measure risk appetite. If risk appetite returns and everybody piles back into crypto, that'll probably be a net positive for the market. If this thing rolls over and takes a massive leg down, that's probably going to be bearish for the general markets. So let's look at SPY and the FATMAAN names. And I've got three static charts that I put on the blog site with trade ideas that you can check out separately over on the blog. 3 pretty interesting setups. So SPY 2 hour, we had the gap down yesterday, all the way down, where price dropped all the way down to support and tagged this 405 at the previous low, and then rebounded and filled the morning gap and moved all the way back up to this band of resistance here between 410 and 411.50, and then the gap would be completely closed at 412. So from a technical standpoint, that's the last thing that needs to be done, unfinished business, if you will, for price to come up and fill that gap, complete unfinished business, and then run into the downtrend line where there will be a moment of truth. Does it have the horsepower to break out and run up to the next gap, or does it roll over? Now, we know we're down 0.5% here this morning just in the pre-market. So, we've turned away from this level on futures, and then we'll have to see how they handle the open with the opening gap above and this remaining gap from yesterday. And here you can see on the 30-minute chart the detail, the gap down, filled this prior gap, went right down to support, came down and tagged it on three separate occasions, and then moved higher the rest of the day up into this resistance zone that we've been watching for a long time. So today it'll be key whether this gets turned away here or, like I said, comes up and then tries to flash this downtrend line. Now, one thing I want you to do this morning, maybe you did it last night, if you're an active trader, I think one of two camps would probably summarize your day yesterday. You either made a ton of money or you didn't. And what I want you to think about is if for some reason you didn't make a lot of money, drill down and think about why. Let's just take SPY as an example. Remember, our tenets. Number one, observe price action, don't perceive it. What is price doing? Price is down. It filled a gap and tagged support. You don't have to perceive that. You just have to observe it, right? What is another central tenet of technical analysis? You buy support and you sell resistance. Was this support? Yes. We tagged a prior low. What else happened? We filled a gap. The bottom of gaps are support. So you got two levels, if you will, of support. So this wasn't a random place in space. It was a very technical move to a very specific spot. So there you are. Yesterday morning, we had a tag of support, and you missed it, right? You missed it. You were thinking, it's going to break lower. You were hesitant or scared because of the price action, and you missed it. We go up again. We hit the top of the gap. What is that? Once you go through support, that top of the gap becomes resistance on the way back up because it's a well-defined level, right? Tops and bottoms of gaps are support on the way down and resistance on the way up. That's why I often leave these gaps in place, even though they may be partially filled, because those lines are important down the road. So Came up to the top of the gap, got rejected, came back down, touched the bottom of the gap. Even more reason to buy, because now that level is held twice. Came up again, rejected again, came down. You had 3 chances to buy yesterday at support. If you didn't, analyze why. Were you scared? Did you not understand? Did you get into your head it's going to break and it's going to go lower? Why? And then if you were hesitant here, you still had a chance to buy on this breakout above 407. Once it became clear that this level was taken out after 3 prior tries, then that was a point to buy. And each level that you go up, of course, it's still objective, but there's more risk. For instance, if you bought at 407, you've got to set your stop just below, because it could come back down to support again, and then you'd be stopped out. You wouldn't want to hold that position all the way back down to 405. So there was a level to buy. This 408 that was, I had it here, but it wasn't a strong level. We had a tag here, and we had some reactionary price action here. So that was a level to buy, and then a stop below. And then after that, it was, to the top. So if you boil it down, setting the emotions aside, it was an easy trade. Let's look at the Qs. Very much the same thing. Drop down to the prior low, which held, and then moved away from that. Of course, this was all a big gap yesterday morning, and there was a gap in there from last week that I had that I've removed. It was it was filled in this price action. So now up we go, and so now today we've got the remaining levels that we've had all along. If price takes out 324, it's a buy. We got big level here at 327. If it takes out 327, that's another buy, with a target of 329 to 330 at downtrend resistance. And at those same levels, if price stalls, we're going to gap down a little bit this morning. If it holds, if it comes back up to 324 and dies, that's a short. Buy at support, sell at resistance. And then if 324 fails, then the target becomes, you've got a little level here at 322, but then the level becomes the prior low at 317. Let's look at it on the 30-minute chart. Here you had you actually had 2 shots. One, you broke below the prior low, undercut on momentum. You came back up and recovered it. That was a buy. On the second candle, you had one last reach back to 317, where you could have bought again. But as the morning unfolded, the farther and farther away you got from support, then those would be less and less objective places to get long. You still would have won, but buying at 320 certainly is not an objective place versus 317. So here today, there's that 322 level. I would go ahead, and I don't have it marked in here, but I would go ahead and mark 324 because that's an important level on the 2-hour chart. And then here's 327. My base case on QQQ and SPY is that the correction isn't over. We'll either make an equal high or a lower high on this cycle, this up cycle, and then we roll over once again. What changes my mind? Just going back to SPY, you break this downtrend line on the 2-hour, that is going to, and we make a run up to 415. Anything above 415, you're going to put in a higher high. Here was a high. And, fill this gap to 418. I mean, the bear case is pretty much dissolved. On the Qs, you break this downtrend line and grind up in here. It's going to really chip away at the bear case. I would, if I was holding any kind of bearish position, from up here or here, once you break this downtrend line, that could spark a bigger rally. So I would cover it. Let's look at IWM. I just wanted to show you IWM on the daily chart just to kind of show you what's been going on. We've been in a big trading range since February between 210 and 230. Neither the bulls nor the bears have been able to take charge of it. So the one thing that would change things is a break through 210 would break the trading range, and then you'd have a $20 measured move out of 210, which would target something around 190, also knowing you've got the 200-day in between. I want to get the 2-hour up here. See if I can find it real quick. Yeah, so here was the 2-hour from yesterday. Not quite as easy of a trade. Like I said yesterday at the noon hour, you would have loved to see this come down to this prior low. Didn't do that. Held at 215 and then worked its way higher. Less of a bounce in IWM. Still finished down 0.75%, and we know that Qs were actually basically flat, and SPY had a good bounce as well. But again, you've got a downtrend line. You've got a remaining gap. If we come up here and take out 223, the bear case is pretty much dissolved. If we come up here, fill this gap and roll over, then I would say the bear case is still intact. Here's an exploded view on IWM 30-minute chart. Here was the gap down. We did have this level marked on the 30-minute chart, and you had 3 bars to buy there, but I don't think it was as compelling as SPY and QQQ, where it came down to the prior low and tagged it. That was, that would have been a stronger opportunity to buy. This would have still been objective, and if you took that trade, you were happy with it. So today, above 218, enters this $1.50 gap up to 19.50. That would be a worthwhile long, but I would be getting, I would be looking to cover up at the top of that gap with downtrend resistance there as well, and then flipping over to the short side. If you're new here, I really appreciate your time. I hope the levels and kind of coaching, trading tips, etc., you're finding helpful in your trading. Hit the subscribe button and the alarm bell. You'll get all my content. If you go over in the show notes, there's actually a place that will give you an opportunity to register for everything that I do. Lots of stuff outside of YouTube, and you'll get that information delivered right to your email box. You won't miss a beat. And you'll also get an invite to our trading room. We'd love to have you. And of course, longtime listeners, I really appreciate your patronage, help, camaraderie. It's great to have you on board. Hit that like button and give me a positive comment. Let new people know that you appreciate the content and that whatever I do here is helping you in your trading. I really appreciate that. So Facebook, again, let's look at the trading principles. Gap down right to daily support, which is, as we know, much more powerful and important than, a 15-minute chart or even an hour chart. This was off of the daily. So that tag of 305, the undercut below gave you some time to get ready for a buy. Why? Because, once it undercuts, you don't know if it's going to keep going. But once it recaptures from below, that's your buy. And if you bought that with a stop below, you were golden, and it just went up the whole day. So let's just say for argument's sake, you got in at 305 or 306. You got to move all the way up to 314. So today, you've got downtrend resistance, clear as a bell. You've got overhead gap that is yet to be filled. You break above 314, 315, that's a long, and you're looking for 319. If it gets rejected here, your first stop is back at 310. And if that fails, if it turns out to be, this whole thing was some type of a head fake and we roll back over, 310 is first, and then 305 is second. Apple, same look, but not as big of a bounce. So now we're back here at resistance at 124.75. I think above that, you take it long, and if it gets rejected there, you can be short and look for a move back down towards the prior lows at 122.5. Tesla remains pinned below key resistance at 560, but there is a $20 gap above. So you break above or into the gap, you can be long up to 580. And then you can see if you can get a push up to 595, which is another big level up here. But look for just a technical gap fill and a reversal, depending on market conditions. If everything's, going red, take that into consideration. Microsoft, again, perfect technical action. Came down to the prior low, held there, and then bounced the rest of the day. You could have bought here. You could have bought at 241. And now we're back here at 243. That's a little resistance level. You can see here it was support. Here it was support. So I think the path is open up to 245, which is the big daily pivot. If you get a move into 245 and it stalls, that's a perfect objective place to take a short and to see if you can get a move back down to the bottom of the channel to fill this gap and to take out the prior low. Amazon came down, tagged the top of the gap. That's support. First touch of the gap, you usually get a bounce, and you got that. Came up here to 3,200, which we said was the pivot yesterday, and that held, and then you got to move up into 2230. The open here, I don't see a play in the middle of the range. You got to wait for 3,250 or 3,200 before you've got an objective level to shoot against. Google, again, perfect technical action. Gap down, filled the prior gap to the penny. Bottom of the gap is support. That's your technical buy with a stop below. And then you got a push back up to 2270, which was and has been a pivot for a long time within the box. Just looking at this a little closer, you could have been cussing yourself out that you didn't get this 2230 buy. Your next opportunity came right away with a breakout above 2240, the bottom of the box, and then that was still good for $30. So don't ever quit on a trade. Just look for the next objective level. Don't beat yourself up. Just say, you missed it, and where's the next objective level that I can get in? And then Netflix, tag at the bottom of the channel and bounce back into the trading range. So today, I think 485 is your pivot. As long as it stays above, there's an opportunity to go up to the top of the box or top of the downtrend channel. And then if there's a breakout there, the door would be open for a move to 500. Like I've said in the past, there's not enough here to get me excited about anything more than, just active trading. I don't want to try to get long strategically at this area for Netflix. It's just got too much work to do. I'd rather get long on a recapture of 500, anchor myself there, and then try to get a move to fill this gap up at 550. I think that would be a much better way to play. Let price prove it a little bit. Let it jump back up into this trading range and then try or hope that there's a gap fill all the way up. And then if it rolls over, you're stopped out here for a paper cut. So you take a $5 loss versus potentially $50 of upside. I mean, that's a great risk reward type trade to take. So let's recap real quick. Got jobless claims at 8:30. We're in a very choppy market environment. Yesterday's price action was very technical, seeking out the prior low, headhunting prior gaps that needed to be filled, and then rocketing back the other way. Very technical, filling the in the case of the Qs, filling the overhead gap, or to a large degree, most of it, with a little bit of technical work to do above with the remaining gaps, but we're red in the futures. So mark your levels, recap yesterday's action. If you made a lot of money, you can recap that and say, yeah, I bought at the right levels, I exited at the right levels, or, I'm still looking for more, etc. If you didn't make a lot of money or made a lot of mistakes, note those, because just simply noting them will help you in the future. The first part of getting better is to figure out what you did wrong and then objectively try to correct it. And one way you can do that is if you're trading the Qs or trading one of the FATMAAN names or trading a name that I'm not even aware of, but you like to trade, write yourself a Post-it note. Here's where I want to buy. Here's where I want to sell. Here's where I know I'm wrong, right? And if you follow your own roadmap, and if my commentary and my levels help you, that's great. That's the whole idea. I think my levels are, for the most part, spot on. Then you can focus 100% of your attention on execution. And when that alarm bell goes off to buy. Set your stop, honor it, and then go from there. And I think your trading will definitely improve with that practice and with that recap. So I hope that helps. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.